Hello and welcome to the Investing on the Go podcast brought to you by FundCalibre. I'm James Yardley and today we're talking about infrastructure, perhaps an asset class which is sometimes overlooked by investors. I'm joined today by Peter Meany, Elite Rated Manager of the First State Global Listed Infrastructure Fund. Peter, thank you very much for joining us.
Hello, thanks for your time.
Peter, can you give us some examples of the type of company you might invest in for this fund?
Yeah, so typically the listed infrastructure fund will have half the fund in more regulated, contracted type businesses. So think of utilities, give us the defensiveness, the ballast to the ship, if you like. So companies like National Grid here in the UK or Next Era Energy, Florida-based utility, one of the world's largest renewable energy companies, would be examples of defensive businesses through the cycle. The other half of the fund will invest in more growth infrastructure, toll roads, airports, mobile towers. So some good examples there would be Transurban, an Australian-based toll road company with a very unique franchise through the major cities in Sydney. Or in the mobile tower space, something like Crown Castle, a US-listed tower company, benefiting from the rollout of 5G at the moment.
Thank you. And why should investors consider infrastructure as an asset class? What makes it so beneficial?
Yeah, look, I think as you look at infrastructure through the cycle, there's a few things. I'd say firstly, for investors, they're really simple assets to understand. We use them every day. You pay your electricity bill, you drive on a road, you catch a train. They're simple business models that are easy to understand, and there's good transparency of how they work. They're an essential service. So when there's uncertainty in the world, perhaps people thinking about recession or low growth, these are businesses that will continue to grow because of that underlying essential demand. Repair and replacement continues to provide a good solid income and growth in cash flows despite the economic conditions. I think they have good pricing power. So if inflation were to pick up around the world, perhaps as a result of overstimulating with QE, these are companies that generally pass through inflation in their price increases. So there's a hedge there. So income, defensiveness and consistent growth over time, I think in the long term delivers a very healthy total return.
And one of your team members recently visited Japan. I don't know, Japan and infrastructure makes me think of bullet trains and things. But,
yes.
Did you find any interesting investment ideas there? Have you invested in any Japanese companies?
We found a bullet train. So exactly right. We've been invested in Japan for a number of years. I think Japan offers very defensive characteristics. It's perhaps not an exciting market in terms of return expectations, but they are stocks that hold up really well in a down market. So they have a place in a portfolio. The companies that we invest in there range of gas utilities and Shinkansen bullet trains. So Trent spent some time. We'd been lobbying Central Japan Railway to conduct an investor day for many years. Open up to the world the quality of assets that they have and what they actually hosted was a day on the new maglev, magnetic levitation test track that they had. So this is a train they're building from Tokyo to Osaka. It'll run at 500 kilometres an hour.
Wow.
An exceptional asset that will take a long time to build, but will future-proof their assets into the long term. And Trent got an opportunity to go on the train, a pretty unique experience. The one conclusion from that trip was that a concern we had around Central Japan was the potential for a cost blowout in that project, given it is quite complex, and he came back with confidence that costs were under control within budget and there was no near-term risk around that. So we added the position to the portfolio at a good discounted level.
Great. And infrastructure is something people talk a lot about in emerging markets. Your weighting in emerging markets is very small.
Yeah.
Why is this? Do you not think there are any opportunities in places like India and so forth?
There's plenty of opportunities. It's just finding those opportunities in a risk-aware way, and it's probably we're long-term investors, very focused on preservation of capital. We've integrated ESG assessment into our process since 2007, since we started. And as you go into emerging markets, it can become more challenging. The ability to defend a contract with a legal system is perhaps not there. The separation of regulation and politics isn't always there. The governance isn't as strong as perhaps other markets like the US or the UK. So it's a more challenging environment. That said, there's significant growth potential. So our approach to emerging markets tends to be cherry-picking opportunities where we see some mispricing events. And, I think a year ago, added to our positions in Brazil when there's a lot of uncertainty around the election. We've got one toll road stock that's doubled for us this year. Buying more in a depressed state. We've added to Mexico recently, only a few percent in each, but again, market depressed because of concerns around what AMLO might do. We're a contrarian investor picking up that opportunity. And recently buying in Hong Kong, when there's protests there have provided us with a good entry point.
And is politics a major risk with infrastructure investing, thinking about nationalisations and also the trade wars we've been having recently in this?
Yeah, we've always said the number one risk in infrastructure investing is politics and regulation. These assets by nature, they're public goods, they're an essential service, as we mentioned, and that brings some good qualities, but it also makes them vulnerable to politics and regulatory change. And certainly as we approach elections, sometimes these sectors, particularly the utility space, is very front of mind in the political parties, and as we've seen here in the UK with the manifesto, can be actually focused on as an area of debate. The renationalisation concerns around the proposals from the Labor Party are real, and we've seen previously a significant underperformance in UK infrastructure because of that threat. With the Conservatives now gaining in the polls, arguably, we've seen these stocks like National Grid and Severn Trent bounce back significantly. So politics can work both ways, but it does add volatility to what's an underlying defensive story.
Great. Thank you very much, Peter. And thank you to our listeners for listening. I'm James Yardley, and if you'd like to listen to more of our Investing on the Go podcasts, please subscribe to FundCalibre. Please remember we've been discussing individual companies to bring investing to life for you. It's not a recommendation to buy or sell. The fund may or may not still hold these companies at your time of listening.